Good afternoon, all. This is Fari Hemzi. Excuse me. It's about 11 minutes after 5 on Wednesday, 8th of February. We usually post on Twitter as we start this as a last minute reminder, but we can't get into TweetDeck. We can't post on Twitter. So yeah, it was earlier, it was fine, but it's not going there. So it's okay. Anyway, I'm glad you guys are here. It's going to be a kind of a short meeting because last time, of course, was a heavy duty one on with about options with Admiral Esposito. My problem today is that I have, as we get gear up for version 5.0 of our training program, as 4.9 is leaving some much to be desired given the current volatility we have, the texture. And some people have claimed out there that the system, there are systems who adjust for texture. Maybe. But ours doesn't. So ours is a kind of a preset in certain things that it does. And to take it to the next level, we're starting on 5.0. But before we get there, we have to build a benchmark of 4.9. This is all described here. If you go here, you'll see what we have done. So we're in that process of doing that. I just got the code to doing that. Last night I had a very good 2-hour discussion with my two programmers, system programmers, both ex TraceStation, one with 15, the other one with 25 years. One of them, one of the vice presidents. And the shell is complete. We're at 4,000 pages, 4,000 lines right now. As the shell is complete. That's just the outside of the how it's managed. And it will be skipping the API from TraceStation. It's called order tickets, and it runs the whole gamut of the accounting, interrogating your account, what positions you have, limits your risk, um, place trades. I could do multi-assets. You could do up to 3 different assets like ES, NQ, and crude. That's where we're starting. Hopefully later on we can add 10-year note. These are very, very liquid assets and you can hedge against each other. So that's the work we're doing. I should have a working model of the first asset, one module, module one, I should say, in about a couple of weeks. And so I'm very excited about that. The order tickets was created because internally they acknowledged there were some issues with the API. That's where you get some weird results. We were getting overfills and underfill, especially at size. I'm not talking about 1 or 2 contracts, but we're scaling up because there's a lot of people trading the system. It's about 100 people who are trading it, and so when you pull the trigger, it's sending out 300 contract orders. Good, because we trade on multiples of 3, and so it's been has its own headaches, so to speak. I've learned a lot. The last 2 months have been on top of moving has been one heck of a learning process, and never been shy about that. Keeps you alive, yeah. And so, but I'm privileged to work with such a talented people, way ahead of curve, and whether it be on Zoom or in person or by phone, each day I learn something new. So stay tuned, but we're going to be intense next couple of weeks. There's a possibility that next Wednesday I will not have a meeting because my schedule is going to be tight on the 15th. We'll see. But 14th is the Valentine's Day, so enjoy your Valentine. In case that happens, I'd say about 50-50 chance of that. I'm moving to 22nd. And I'm supposed to have the working model on the 20th. So we'll see how things go. Most likely, you could get stretched out and we'll have this meeting, our weekly meeting. That always happens. I remember the CFO of Northrop, Jim Wilson, used to tell me, he says that this is number 2 guy at Northrop, on the board of directors, the whole shebang. He said, and he was consulting for me on a company that we were putting together. He always would say, double the budget and triple the time. Then you're gonna get the project done. So go figure. Now, of course, that was highly technical, or technologically adventures we had with whether it was the drones or the stealth bomber or advanced tactical fighters. So Anyhow, let's move on. Let's go to econ calendar. So here's the active part of our proactive market timing webinar. So look, we spent only 5 minutes on housekeeping. Somebody had complained that this was I was doing this promotion. No, it's just that I'm out of breath, out of time for emails and this ambassadors. My only way is to be able to compress it in a few minutes, once a week, send it out. And there are folks who just listen to that. They're not really interested in. They do a short-term period, but they want to catch up what we're up to. And this is our easy way for us to get to everybody. So today we had a bunch of talking heads from the Fed, or better yet, from the Temple, or we call it the Temple, especially John Williams out of New York, and Bostic, I think he's out of Atlanta, if I'm right, and so on and so forth. Kashkoy from Minneapolis. Kashkoy was also quoted a couple of days ago, or was it on Monday, and it was a kind of a head-to-head comments versus Jerry Powell. What a crazy day Tuesday was. I went from up about, I was up about, let's say 10%, 11%, dropped down to negative 15%, and then came back and closed negative 8%, positive. Now, came back and closed positive 8%. Yeah, it was wild. Now, but we trade MNQs a lot, but because of the situation and the liquidity, I was fortunate enough to trade NQs, so less commissions for the dollar made, and better 10 times the return. Yeah, so it was good. It was good. So commission dollars were lower, 10 times the return on MNQs, and there was liquidity there. But that opening, as he came to sit down to I think Economic Club of Washington, it was wild. So hopefully you survived that part. But I gave that back in a few seconds later. I mean, yeah, but I know, but a few minutes later. But 10 minutes after that run up finished, it came back so hard. And I took some out, but not enough. And then the drop was so big, it made me negative big. And for a moment, I lost it. And I said, Ferry, remember, Daddy, you don't give up. When that aircraft behind you has a lock on you, and they're about to launch the missile, you got 30 seconds. You better think straight here, young man. And I'm glad I did some maneuvers, couple of short, couple of longs. As it turned, I came plus 8% net after all that move. Not too shabby. I'm happy. Today we did 22%. I only traded about 25 minutes. Yeah, that was really good because I was busy. I had things to do. I said, guys, I came in and said to everybody, guys, I'm just going to trade a tiny bit here in terms of time, but I'll wait for our flagship product that's internal. It's not available for usage. It's called Tiger Shark. I said, well, I'll wait for Tiger Shark to give a solid signal, either long or short, because I gotta get to other things. I can't mess around. So I started working my stuff with my eye on one of the screens, and sure enough, it showed up. And then we went. That was good. One short, two longs, total time in the market about 27 minutes, 28 minutes, something like that. Could not have the energy of staying in like yesterday. Yesterday, all I had was ice cold water, some pistachios, and Greek yogurt. A little bit of Greek yogurt. That's it. That's all I had. So can't live on that. Anyhow. So what's ahead of us in schedules? No data today. This is the second week. We don't have GDP here, or I'm sorry, CPI, PPI. That's the following week after expiration. Next week's expiration. So we're gonna have CPI, PPI next week. But this week we're gonna have jobless claims as always. Nothing else. Not too crazy about NatGas, other than nobody wants it. Yeah, it's getting cheaper and cheaper. So because of runaway too. Let's look at consumer sentiment. That's for Friday morning. 65 almost, and 65 consensus. Well, look at that range. Okay. This is U of Michigan, right? So that's at 10 o'clock Treasury doesn't matter. Baker Hughes doesn't matter. We're good. That's it. That means it's a low uh, traffic period here, low news. Next week we'll have more CPI, PPI plus expiration. The following week would be a big one. GDP, durable goods, to name a few. And somewhere in here we're going to have retail sales and, of course, housing. That I don't see on the schedule here, but it should be next week. So keep that in mind. I usually keep the screen on, both for what's coming on and also if there's a report to see how it got reported. But that could be a little bit, you can't do this exactly at that moment because it takes time to post. And a lot of people are hitting it. This is the engine that runs most economic calendars out there, like Bloomberg's and Market Watch and so forth. So I usually go to the source itself. Anyhow, that's it. Not a huge week this week, but news wise. Other than what he do yesterday and today, what these characters from the Fed created. Okay. Now, I do not watch CNBC that much. I do record it for a sake that I'm middle of trades. I usually don't have time to interact with the TV. But for two things, if there's a really, really bad news, I want to hear it live. Usually people in the room are chatting a bit faster anyway, in a text mode from different sources. But also if there's a video, you want to watch it. But I do record on DVR for some browsing at night, skipping the commercials and skipping most of the talking heads to get some important guys. Watch yesterday's Fast Money at 4 p.m. or 5 p.m. I think it was 5 p.m. Yeah, with Guy Adami. His analysis was spot on, not because that's what I wanted to hear. No. But I do believe in him. I know him. I've worked with him before. He's a very, very smart cookie. But look at his analysis about where we are in SPX levels and PE. His conclusion was that we're overpriced. Sooner or later, the smart money will figure it out that SPX is overpriced and we should be going down. Did it start today? I don't know. I mean, we've had a couple of days of down. Then we had 3 days of down, and then let's go to charts. And then we had a big day yesterday that messed up all the charts. Here we go. We had 3 days that we calmed down because we were at 2 sigma. We know 2 sigma is a tough area. That's like a barrier for us, especially SPX, because of lower beta. And the boat is heavy. This is 80% US equities. If you get this right, you get the market right. Okay? 80% of US equities because of its market cap. So 3 days down, and yesterday comes Jerome Powell and drove everybody nuts. That's fine. Now we drop down. Usually, I treated yesterday as a Fed day. I've always said, historically, you could see the day after non-farm or the day after Fed FOMC meeting, there's some market reversal. There's some give back. Whether it's long or short, it's a matter of what was the move the day before. So the previous trading day before because of FOMC, non-farm. So we moved up hard yesterday, gave it back 46. I'm about 40 handles behind from the 70. No, about 30. No, 50. 47 handles. I'm 47 handles behind. Okay, that's fine. But I'm ready to put a trade on. I'm going to give you another put spread. Our last person was stopped out. This craziness created that. So we'll put another on. Well, I'm still short with time and digest from, where is it? Hold on 1 second. Here's the chart. We just updated near the close. I updated yesterday and then early this morning and now. Because yesterday was a really bad day. I don't want to just show you the good days. For a short, for a short, it was a bad day. I don't want to just show you the good days. I don't operate like that. I don't need to do that. People know my track record and my transparency. But we're short from 4070 on from January 27th. I'm going to still hold on with that. We got stopped out of our trade, but we're not going away. No. Market to me is overpriced slightly, but I'm realistic. I'm not going to sit there and they kill me. But I can sit through 40 handles. That's not a problem. And frankly, yesterday, so much was going on. I did not get a chance to really look at it in depth. That's the honest truth. When you're running multiple accounts and you're running NQs, yeah, and minimum accounts are about $250,000, yeah, you get busy. All right. So we're pulling down, we're at 118. Let me refresh this. As you know, this is a data plant issue. There we go. See, it gets adjusted. So we're neutral here. We're near zero, approximately. The range is huge. That's 300 points. So it's negative 60. It's slightly below neutral. So call it neutral. Same thing here with the NDX. That's what making oscillators. We're about to cross on the CIs. A CI diff's about to go down. But it could be like this. We don't know. Remember, we just have to, and charts are rear view mirror. We've got to get there. We got to see it. Okay. But the volume is picking up to the negative side slightly. Nothing fancy. 2 to 1, about 2.2 and 2.3. So, same. If you have any questions, you could post them. No worries at all. Okay. Pull back here on Dow. It was a huge day yesterday, no question. Rates are going up. That's why this thing is pulling down. The utilities is coming down. Big, huge run on transportation. So the corresponding move in SPX was not a surprise. I've always said watch transportation for the Dow and SPX, especially SPX, and Russell for Nasdaq. So again, all of these are getting to near where CI now. Not little bit, not too high. It's about 25 level, both of these, but they are about to cross. So we could be seeing a little bit of downtick here. Okay. The trender, we run into a what do you call it? Distribution up here. Okay, a little bit of a intraday wall without a real movement there on transportation, but Russell is leading, and it should. And you could see what's going on. Another 2%, almost 2% here on Nasdaq. Low was, hold on one second, I'm looking at another screen. Oh, excuse me. Let's do it this way. Overnight chart. That's the one probably the better. We have it here. Okay. 1.7 down. 512. We closed slightly above it. Okay. All right. Good. Listen, I'm not rooting for the stock market to crash. I just want to take advantage of the mispricing. That's all. I've been a net buyer, over the years. I've been a net bull, but there are times you got to take a pause and take advantage on the other side, especially when the bulls are hibernating. They're kind of they're just they're happy-go-lucky and everything is fine, and that's where you go and skin them. Money doesn't grow on trees. Somebody's got to lose it for you to win. So, okay, Momo went to 2.35. It was pretty much near zero this morning, or -1, so it dripped down slightly. We were at 2 sigma at this morning as a start. I'm sorry, at 1 sigma to start. I'd come down from 2 sigma, and now we're approaching zero. So that's all good, no problem. No new lows. Some new highs, but receding. In correct perspective is if you look back weekly, and you can see neither side has the edge. Not right now. So the system, the trending system is long weekly and long SPX. I mean, long daily. Not a huge set of parameters, just purely mechanical, long and long. Okay. You cannot trade it. You cannot trade the market with just these two. It's just the way. It's just an input saying if a system was trend following, what would have done? Simple one, not elaborate one like what we do with Orb. And this is all day. This is daily. So it takes account of all day. Orb is a totally different animal. VXN, and RVX for Russell. Again, we're having some data problems. They don't seem to listen. Oh well, that's simple. We closed above center line, which is 0.6 for first time. in a long time. Last time we were up here was here. So yeah, that's no, that was open. I'm sorry, close above. Right up here. This is where we were last. Okay, so beginning of the year, we had closed above central line, which is 1 sigma. We touched it today. It's working that range. So I think we got to get to about 23 for this all makes sense. The problem here, these sigma levels are too tight. We're too tight. So you can call it 2 sigma, 3 sigma, but in reality, it's not big enough to make a dent in the option activity or fear and greed that ensues from that. That's Q. Oh, whoa, we dipped down a little bit. Interesting. Okay. It's been holding up between +1, +2. It just broke without having to zero. And the absolute value is 121. Remember, the range is 110 now to 170. So we're underneath this median, which is 170, 140, 170, 140. Yeah. Or yeah, the median is here. So no signal here. I wouldn't go by that. Treasury yields, new highs are coming. No question. New highs are coming on the front end. There was a talk that we could see the 10-year above 4, even possibly try to test the all-time high for like 7. Then I think it's a 7-year all-time high. But this is actually, you only have to go back that much. If you do this, you'll see. It made a new high here in October. Yeah. So I don't know we'll go there, but I think path of least resistance is more uptick. I just see a lot of nervous real estate people down here. So some a little bit more real estate, I mean, more nervous than others. So mainly because of interest rates. Yeah. Okay. The spread. Again, this is a VIX spread. We always do this every month, every week. So I'm keeping it really simple. Front month here is the March. I'm sorry. No, I'm wrong. It's February. February we still have it, but most likely this Friday we have to roll it because you don't want to be long the front month. It starts to roll that week. Remember the rolls are not on Fridays for VIX. Is on Tuesday, and then I'm sorry, rolls on Friday. The settlement is not on Tuesday. The last trade on Tuesday, settlement Wednesday morning. You don't want to roll in the week that it's expiring. That's what I'm trying to say. So this Friday most likely we have to roll it over. That would be long March, short June. Right now we're long Feb, short May. And that value, as of now, as we speak, stands at 2.06. And that's kind of neutral. If it gets to 0, that's where the bottom is going to be. If it's negative 3.5 to negative 4, that's the top. So we kind of went up a little bit as the market dropped. Gets to negative to 0, then that's typically a bottom. And that's where we are. This is negative 1. So the scale is usually negative. It's inverted asset anyway. Lowry's up and down volume. Oh, what happened here? Murray, what happened here? Okay, so let's get more data in. Sorry, this needs a little bit more data. My bad. Sorry, my hours have been really, really crazy because of what we're trying to accomplish. And so, as always, that's nothing new. Dennis knows. That's nothing new. Or Ted knows. This is the hours I've kept all my adult life. So, let's see. There we go. Okay. No signal here, guys. I mean, Russell says we're going to go down. He's getting some negative reading, but not even there, not enough. Nothing clear cut. Just the overall net negative bias, you could see. Moderately pointing south, but not enough, in my opinion, for a flush and a reversal. Okay, here we go. This. Okay. This is the daily, but of the futures itself, so it's live. Well, if the market was open right now, it would be live because it's 5:30. Okay, it's between 5 and 6. But you could see where we are. Long at ES. This model is. I'm sorry. This model. Let's be clear. Yeah. I'm flat right now. I don't have a position. Long ES. Long. Yeah. Mid caps. Russell is long and NQ is long. The Nasdaq. So never stays like this. We're 4 of them are long. Or 4 of them short. So maybe we're gonna be seeing some choppiness. I can't read this. Okay, I'm not good at this. Peter is a lot better. My moderator at the GoToMeeting session, and this is his creation actually, with the help of some coding guidance from Larry. And this data comes from TradeStation. You could see, just like if you're familiar with CI and CI diffs, is pulling back. You know, so at the margin, the delta is getting more negative. Does that make sense? Delta is the differential in time of one interval. So, okay, this is our IBs today. Let me shrink this a tad. Okay, you can see what happened today. There we go. And so, pretty harsh drop early on, and then and we kind of sat there. You know, it was just reverse of yesterday, where we hit 5 and 6. Here, look at yes. This is yesterday. Okay, this is yesterday, and you could see these are 4 levels. Look what it did, and just the moves were incredible, absolutely incredible, and absolutely exhausting. I mean, you know, so. But look, this is like we hit like 8th level. This is 4 IB levels. We hit another 4. Today was pretty good reversal off of that, and it took a lot of the. Of course, we gave back before the close, but it took a lot of the fluff out. If you look at it, we came to these levels. So often we test those. Take a look at it. It's still above the high of yesterday because that was pre into his interview, but and then it was sausage. It's Wednesdays. Wednesdays we make a lot of sausage. Remember that. So I took my small capital account. I said, okay, I'm going to trade short term for a few minutes, and I'm done. I'm grateful to myself to follow my own discipline because often I don't. Often I get greedy, and that's really bad. Today I held on, so I'm happy about that outcome. Let's see, what else do we have? No tiger shark, we can't go there. And this is where we are now. Okay, on 30 minutes. I love to watch 30 minutes by Sigma channels. You see the volatility, you see the squeeze coming either way, up or down. You can see it from there. Of course, CI and CI diff will lead the direction. So as Ted will attest, this is one of our simplest charts we've had, tested back some 20 years. Just simply that. Your volatility and direction. That's basically what you need. So, with that said, let's go to hello. Come fly with me. Yeah, I love this picture. There you go. Now let's get to this one. Now, by the way, I just ran this as you guys were coming in. So, and is this February 8th? Yes, today's okay. Yeah, 417. Okay, good. Okay. Mean reversion here versus last week. If you remember, last week we were somewhere in here. We're pulled up. We've gone all the way up to into high 70s, threshold of 80. Hasn't touched it, but I think all these moves get highly tired in the 80 plus range. Let's go to 5 years to just remind us of typically where these things fall apart. So we got a little bit more to go, but you know we could be doing this too, and then pulling up. So I think it's a little bit bumpy here. There's a lot of chaos out there. Plus, you got exogenous news, you got the interest rates, you got the Fed, all that. So I'm not surprised what this has done. The separation of the two moving averages says path of least resistance still up. Okay, so I'm not going to stay with the short very long, but I wasn't going to go and take that hit instantly. I just said, wait for it, be patient. That kind of move has a reversal. Of course, it showed up. Boom. With that said, uh, that's my spiel. As I promised earlier today, this is going to be a shorter webinar. Last time was an hour and a half. This one is about 30 minutes. Any questions for me? Hi, Musa. How are you? Hi, Jim. How are you? Hey, David. What's going on? Mr. Murphy, how are you? I did answer your questions by email. Hi, Brett. Long time no see. Of course, Yusuf. Hi, Michael and Anita. Okay, guys. Sorry we could not post. Tom were there. Tom, Dennis, and Ted were there earlier. We could not post to alert you on the tweet deck or Twitter that we're opening it. I posted it with my phone, but I didn't say it's shown. So, but we started pretty much on time. About 5:05 to 5:10. We were just waiting for more folks to show up. Any questions for me? Bias is still short, but not for long. We gotta see any move down below 150. Then then we gotta kind of look at that daily. What should do? But we're at 61 right now, so we're a little bit more to go. We'll be a little bit patient with it, but if it goes to 150, sits there, could be a bounce back, and then we have to cover it. Okay. Range has collapsed pretty much, so you gotta be careful. We've had some tough intraday issues, so I think there's overhang. So could be again PE, could be PE. All right. Any questions for me? All right. Thank you all. I gotta get back to ORB and get ready for 5:0. Thank you all for attending. This will be posted as always quickly on our YouTube channel, which is right here, right under SIBO signal. You click on that, and there's tons of stuff for you guys, both by subject and also sequentially. Okay. Thank you all. See you next week. Again, potentially there's a small chance that we won't have this webinar because of my schedule, but definitely we'll have it on 22nd. If everything goes smoothly, then yeah, I'll have this. We'll do a 30, 45-minute one next week. Okay. Thank you all. Good night. Thanks, Dennis.